The local bourse facing mixed global markets this morning, the JSE closing lower on Wednesday, underscoring the uncertainty that has gripped stock markets in recent weeks. Makwe Masilela is Chief Investment Officer and founder at Makwe Fund Managers. He joins us now for the latest market moves. Mr. Masilela, thank you very much for your time. It's been a turbulent week, to say the least. So far, the local bourse, I'm not sure what to say there, but perhaps you'll give us the perspective. Talk us through how things are shaping up at the JSE.
I agree, Goli, and good morning to the listeners. It has been more of a casino, but yes, we have slowed down 1.2% yesterday, but today we managed to get a very positive handover from the US and Asian markets, and hence we opened up 0.7%. And the main event for today is going to be the European Central Bank, where we expect them to increase interest rates seriously. So the market already expects a 75 basis point hike, and that is more of front loading, because apparently front loading has a great potential to be able to deal with inflation expectation compared to a gradual increase.
Let's talk about oil prices, which seem to have steadied after a sharp sell. Talk us through those developments, especially in relation to the current volatile rand.
It's more of a question of the standoff between the Western countries and Russia, because we've seen Russia already. They've threatened that if the European Union continues to cap the prices, then unfortunately they have to halt all gas and oil supplies to Europe. And we know that there's been an issue about the demand outlook, as we have seen when it comes to the demand, that the likes of China are struggling because of their COVID restrictions. But generally, markets are bearish when it comes to oil prices because we expect some form of recession. But if you have a tight supply, then that can at least try to help oil prices to go up. And as we've already seen that OPEC, they intend, or they've already agreed to cut 100,000 barrels, but we don't know the real effect of that, because already OPEC are struggling to make their target, because currently they're below their target by almost 2.9 million. And yes, with the rand, it's better for us to see oil prices going down, because we are buying oil and we are net importer, and higher oil prices, it means it's inflationary if the rand itself is weak. And we've seen that the rand itself has been struggling other than domestic issues, but mainly what is happening with the US dollar, which continues to be very strong. And we know that a stronger dollar is not good, not just for emerging market currencies, but also developed economies. At some point, it affected the likes of the yen as well, the euro and the pound as well. So we hope to some extent the Fed will get to be worried about a very strong dollar, because ultimately it will impact their exports, because it will make their exports very expensive going forward. But yes, the rand continues to be at the mercy of what is happening with the US dollar, and today we expect to hear more when it comes from the US Central Bank President telling us the path going forward when it comes to interest rates, and they are meeting 21st of September.
Let's quickly touch on company news, and we begin with Capitec releasing its trading statement this morning. Talk us through their numbers and perhaps broadly how we ought to interpret the overall state of banking in South Africa.
Capitec, they expect their headline earnings per share to go up by 18%, and they've got one of the highest return on equity when it compares to their peers. And the return on equity, basically it means that the guys are able to convert equity financing into profits, which is a good thing. But generally our banking sector is not looking too bad because they're well capitalized. The problem here is if the Reserve Bank continues to increase interest rates aggressively, then unfortunately it's going to impact consumers and result in high bad debts. But so far, if they continue to increase interest rates at a steady rate, then that will help the banks, because their interest income will continue to increase.
Let's conclude with Sanlam, who have released their interim results as well. Help us make sense of their performance.
Robust performance in a challenging environment, even though we've seen that the basic headline earnings per share will be down almost 7%, and also we've seen that the likes of the volume of the new business, especially the life insurance, is down 7%, and also the value of the new business covered is down 17%. But you look at the profits that are meant for shareholders, up 52%. But the guys are well positioned to be able to offer what they call simple products at a scale, and also using their good platform, and also the guys, they've got a very good relationship and partnerships with the likes of MTN in Africa, so that bodes well for them. The problem is, if we get recession, then it's one of the simplest things that people can do is to cancel their policies.
Makwe Masilela from Makwe Fund Managers, thank you very much for that markets update.